Hi guys, this is Ray from Next Forex Trade, and today I'm gonna talk. I think I'm going to talk about. I'm going to talk about swaps, how swaps work, and what to look out for them. I'm going to go over the trade from yesterday, and just explain how that panned out. And if there's time, what I'll do as well is have a look over potential setups in the market. So this here is the AUDJPY, which I gave an explanation of the setup on yesterday. I'll leave a link in the description for that for you. And you can see, so this is the trade here. I'm just going to expand this so you can see all the trades that are done on this account, 100% transparency. So this one was break even, this one was a loss, and this is a trade that we done yesterday that came in at the profit here of 197 and 78 pence, and this account is in sterling, so that's pounds. And now this is something just to be aware of. So here's the commission that was paid on the trade, and here's a swap. So the swap here was £9 and 12 pence on this. Now the swap is basically the if you carry a trade from one day into the next, you're either gonna pay or receive an amount of money, of money for doing that from your broker. It's just the way that the interest is to do with the interest differentials between the two currencies that you trade, and you could be paid it, like I said, so it could be money into your account, or it could be money taken away. And what happens on a Wednesday into a Thursday with my broker is that there are triple swaps paid. So Monday, Tuesday, and Wednesday, if you've carried the trade over from one day into the next, the swap paid would be roughly a third of what that is. But when it goes from Wednesday into Thursday, it's actually a triple swap. Sorry, Friday as well is another day when it's a normal swap that's paid. So Thursday into Friday is another normal swap day, but Wednesday into Thursday is not. So the reason for this is because we have the Forex being a market that works Monday to Friday. So the Wednesday into Thursday payment is basically to make up for the weekend. So you can think about it like that. So you're paying for those 2 extra days of interest that are due or you receive, and they need to get paid. So it's important to keep an eye on what your swaps are, because they are a cost of business. And especially if you're looking to, hold a position over the longer term, if you're a swing trader, or looking to invest in Forex and hold this for many days, weeks, or years, you got to think this swap is going to be a cost of business. So you won't be paying that every single day. It does vary up and down, but it's definitely something to consider. That's why typically with my positions, they don't really go for much longer than a day and a bit at the most, 2 days or so. So it's just something to bear in mind. Keep an eye on your swaps. And one of the ways that you can find this out in MetaTrader, what I've done here is press Control M to bring up the Market Watch. Sorry, Mac. Anyone on Mac? I don't know the shortcut, and that probably can. Oh no, what am I saying? Mac, you would have to use an emulator to get it to work, because this is a Windows-based piece of software. Anyway, so on PC, Control M. Mac guys, Google it, and what you do for the currency is go down and right click, and you want to go to specification and scroll down to where you've got this in these details. So these are all the different details relating to the currency pair, and you want to see where you've got the swap. So swap long and swap short. So you can see this is what you'd be paying per lot for being short on this currency pair. If you were long, then you'd in fact be getting paid 20 pence per lot into your account. So this would have been, you know, a positive. This is also based on the lot size. So you need to bear in mind, if this is 77.77 of a lot, you just need to figure out that the way I think of it is it's going to be 77% of that, right? So don't have the calculator to figure that out at the moment, but yeah, I'm sure you can do the math yourself. So this is just something to bear in mind. Look out for the swaps. Now let me just go over this. We're doing for time, so okay. So I'm going to go over this trade as well that I done yesterday. So let me just get the best way to do this. I'm going to get the entries and the exits up so that you can see. So all right, so you can see this was my entry 75.86. Trying to think of a quicker way to get this visible over all of the time frames without taking up too much time. So I've put in an alert just so this can be visible. You can see it's here, 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 here as well. And stop loss. So this was the stop loss on this trade. Let's find out. Oh, right, sorry, blind. So stop loss is this one here, 76.205. I'm gonna add this in as well. And the reason I'm using alerts is because I could put horizontals on each of these, but it's just going to take more time. One sec, let's just turn off those alerts for now. Okay, just bear with me while I'm setting this up, and we can go over. This is a live stream as well for anyone watching this back, so this is not the edited version. And lastly, we're going to look at the take profit. Take profit was 75.51.2. Okay, wunderbar. All done. So this also, what we need to do is put in the entry time. How can we do that quickly? All right, let's. So this was 519. Just as well, get used to what your the time is on your platform. So this is MetaTrader platform, and this is it is 2 hours ahead from my current time. So I'm on London time, BST, British Summer Time, and this is always going to be 2 hours ahead. So if you're looking at anything in MetaTrader on the count history, just bear in mind what that is going to be on your based on your local time. So although this is saying that the trade was at 5:19, it would have been 3:19, 3 a.m. 3:19 UK time. So I'm just going to put the entry on the daily here. So alright, let's do this manually. 27 05 19. Okay, so yesterday this level here was where my entry was, and I'd entered this based on so this level on this candle. I explained it yesterday. The price had basically, where's my standard deviation channel? There you are. What I was saying is yesterday when I was speaking, let's just see, just take off this here. No, it's the other one. This is all that would have been visible from the market. So my rationale for entering was the fact that we'd had this standard deviation channel, which was also a trend line. There was also a lot of resistance along the top here that was evident on daily, 4 hourly as well. It had broken through this trend line, and I saw that as a justification to short this with a stop loss, as we can see where this red line is above here. So I'm going to blow this up a bit as well, just focus on the hourly. So my stop loss was placed above here, which was on it. If we go back to the daily, we'll see that was a reversal candle, and I'd put my stop above this level because it made sense in terms of a clear area where I'd be wrong on the trade. There was good protection in terms of you know, it being a clear indication if it were to break these previous highs, I'd be wrong on that. It was also outside this standard deviation, which was another reason as well. I don't think I mentioned that, but I mean, it's useful to know when structuring a trade, you're just trying to justify the decision. You can still be wrong on the decision, but if you're wrong, sorry, you can still be, the market can still be still stop you out. But if you've made if it's hit it and it's still part of your plan, that's fine, right? Because all you're doing is planning for what could go wrong. Firstly, I know it sounds negative, but that is the first step for any good trading strategy. Plan for what could go wrong rather than thinking what could go right. Think how this trade could mess up as your first step, and then extrapolate how you're going to make profit. Does the 1-to-1, 2-to-1, whatever risk reward you're going for make sense based on how you've managed the risk? So we can see that as the price progressed, we started to see lower highs and lower lows as well. So it's starting to show that bearishness that I was anticipating, and that level that I executed at here, it started to find some resistance around that area. Not a specific price, as resistance never generally is, but it wasn't moving much higher than my entry point. And you can see here, this is where my stop was, and the exit on this was relatively well timed, because you can see not long after interacting with that level, and this is the hourly chart, it did move back up, and it's retraced and is still retracing now to pretty much where my entry point was yesterday. So this trade roughly was 1-to-1. It's the risk up here was risking £200, and the reward on this was roughly £200 minus the cost of business, the swap as well. So there are reasons really why I didn't want to go much beyond that in this instance. So this played out you know, relatively well. And if you see it's coming back up to the entry point, that's why, I don't know if you can hear that, but MetaTrader's bleeping away because it's coming right back to my entry, what my entry was yesterday. I'm just gonna mute that. And sorry, I got the sniffles as well. That must be really annoying in your ears, but my apologies for that. So one of the rationales for me going for 1-for-1s is that just through observing price for quite a long time, I mean, it's my preference that rather than try and take a position all the way down for 3-to-1s, 2-to-1s, whatever, or 4-to-1s beyond. The going for a managed trade, so I may be even happier to take out something that is less than 1-to-1 if I see reversal signals early on. The reason for this is that there's always going to be an opportunity to jump back on the trade, and the way that it's structured as well, as long as the price structure hasn't been violated too much, it means that there's always going to be an opportunity to get back on. So even if I'm taking less than 1-to-1, what I'm going with is a higher probability trade. So this goes into the concept of expectancy, which I'll touch on a bit today. So expectancy is the idea that you it's I think a lot of people focus on how frequently they win. So for example, let's say we had a trading strategy, and keep the number simple. Let's say that you had a trading strategy that 99 times out of 100 you're making £1, right? You're making $1, whatever. And that means, you've got a 99% success rate. But over that course of 100 trades, it doesn't necessarily mean that it's going to be profitable. If that one trade out of 100, say, loses you £500, right? So you've got 99 times where you're winning £1, which makes you super, successful, if you like, in terms of the success rate. But if that 1 out of 100 times you're losing £500, you've got you're negative £401. So expectancy, the concept of trade expectancy, is it focuses on not how the focus is not on how much or how frequently you win. It's more focused on how much you win overall. Yeah, the frequency isn't as important. So when I take these trades, I know I'm happy to go sometimes for less than 1-to-1 in terms of the trade management. I always start out with it set to 1-to-1, but there may be something in the lower time frames that gives me some inkling that there could be some reversals. And if I'm in the green, if I've made profit off of that, then I'm not gonna I want to protect my capital as much as possible. And there may be instances where I use the lower time frames to time an exit before it hits the take profit. And that's just because I spent a long time understanding that concept of expectancy. These trades, the way that they're structured, is generally, if you look for these trades where basically the price is in a trend, it's pulled back, it's finding in let's focus on a downtrend in this instance, it's found an overbought area, you've placed a stop loss above what you deem to be a lower high, then you've increased the probability of that trade going in your favor. So the success rate, I know that this type of trade is going to be generally more there's the expectancy works in my favor because I'm going to be making more successful trades and at a lower amount sometimes than 1-to-1. I'll have to go into, I think what I'll do is I'll plan out a video where I can explain that a bit better, because that's probably been a bit confusing for you. But what I'll do as well, there's a great book on it, a guy called Van Tharp, Van K Tharp, trading for financial freedom. I think it's chapter 7 or 8 explains, it's a common theme throughout the book, but the book explains expectancy really well. Really good. If you're struggling with the concept, or you're in a position where you found that you've made lots of winning trades but you're still losing money, then that could be a good book to just to dig into to really help clarify what that's all about. But in this instance, this trade did come into profit. Everything that I'm doing in these videos is completely transparent to you. There'll be a link to the MyFX book below. You can also look at the historical videos just to see how I explained the setups as well. So yeah, that was that trade. So let me just see how we're doing for time. And okay, I'm going to do a quick cycle through. So there might be a bit of silence here just while I'm thinking about what opportunities there could be, because I haven't looked at it this morning before coming on live. So I'm going to look through, and if there's anything that pops out for me, I will let you know. No. This is actually, I'm going to clear this up now that I've spoken about it. There's viably another entry on this. I don't think I'm going to trade today, just because I've hit my my goal for the week in terms of what I need, and as well Fridays can be a tricky day. I don't like holding positions over the weekend. The great thing about the Forex market for me is it's 24-hour, 5 days a week, so gaps are very unlikely from day to day, Monday to Friday. However, Friday into Monday, gaps are more likely. So gaps obviously where the price closes at one price and then it doesn't continue into that, it jumps to a higher or lower price, which it's just another means of risk, added risk that I don't like. So I'll go over that tomorrow a bit more. But this could have a, yeah, AUDJPY, no. No. That candle needs to close. But there's potential for going long once that does, so maybe next week. No. No. And what I'm looking at here is the daily chart for opportunities. No. No. And I'm basically looking for the price to be overbought or over, some signs of reversal, and the price to be overbought or oversold. No. And also trade in the direction of the trend. I'll just touch on this quickly. This one here, it is looking overbought, but and it is obviously a downtrend, but we haven't seen any signs of clear signs of reversal as of yet. This candle still being formed. It's past the previous high of the previous, past the high of the previous candle. So that needs to be a reversal candle, which may be by the end of today, and look for shorts on that. But then, you know, that needs to happen over a course of a few days. Clearing up. Oh, the but as well, what I'm doing, the button I'm using to clear these all is Control B, and then I just Control A to select all, and then Alt D. No, okay, so that's, I mean, pretty much the way that, I mean, that's taken all of, you know, 5 minutes to cycle through the market. That's typically how I would look for opportunities in the morning. So obviously when I explain these things, it takes a lot longer than 5 minutes to cycle through, but that's the idea. The main opportunity that I can see at the moment is in fact on that same currency pair that I took yesterday, AUDJPY. Now this isn't quite ready in terms of a setup for me, and there's one thing that's concerning me as well. So, and it was information I didn't have yesterday. So there's everything that held true yesterday is still pretty much in place. The fact that we're seeing the standard deviation channel and the price interact up here. We saw the reversal candle and the price has continued to fall away, making lower lows with each candle. So the high of the previous candle hasn't been moved past. That could happen today, but it hasn't as of yet. So there's still good context to be short on this. And you can see on the daily there was this resistance here from this level where that reversal candle happened a couple of days ago. This candle here, there's good resistance, and in fact I had my stop above this in yesterday's trade. So daily is still looking pretty good. The problem with this is on the 4 hourly, and for me the tricky thing on this is the standard deviation channel that I have around this now. It found it found support off of this a few candles ago, and it's moving back up in this channel. So there's a slight lack of correlation agreement or time frame agreement that we need. So we want effectively this 4 hourly to be saying down, as well as this to be saying down. At the moment this is saying up. Now the lower time frames are still relatively bearish. I mean the 5 minute here is started to show higher lows. This, just see on that 15 minute or even the hourly, the same information. Come on. So this here on the hourly, so it's moved within this channel and it's come up here. So what I would want to see within, it's 12 just gone 12:07 now, I'd want to see this start to move down past these lows. So in the next hour into 1 o'clock, if this continues to break much higher and break this resistance, it's not really tradable for me, because it's still, I'm saying this 4 hourly channel here, the price is still encapsulated in this. So this could be signs that it's going to go up and at least meet this resistance or possibly break it. So the stars aren't aligned really at the moment to consider trading this. And one other thing that you can think of as well is each of these bars here, are 4 hours. This is a 1 hour. So this can be a good time management thing as well, because if, like I've said, I need for this I need the next bar, the next candle to make it a decision on, and it's 12 o'clock now, then there's no point looking at this, watching it like wet paint dry until that hour's up. So you could set an alert on your phone or something to just come and monitor the market, knowing when a candle's going to close. Same thing with the 4 hourly, same thing with the daily. That's why my analysis on the daily is so quick. It's because I know, when I'm looking at these, I know what has to happen. It needs to be another day before the candle forms before I can make a decision. So why bother looking at it until then? There's no need to watch it. But yeah, I've covered a few things today. I think that's enough for this webinar. If you've got any questions or any suggestions, this is just starting out. I know my presenting is something that I'm going to be improving on, certainly with a lot of ums and ahs. I'll be working on that. But if there's any particular content that anyone would like explained a bit more in more detail, happy to do that. And again, you'll find the link in the description as well for all the MyFX book as well. I also do one-to-one coaching, which you can find more details on at nextforextrade.com. Again, the link will be in the description. Thanks for listening. Bye.